Hello, everyone. Welcome back to MoneyLetter on Markets, where we try to make some sense out of the complex world of money. I'm Brian Kelly, publisher of MoneyLetter, and today we're talking about something that affects every single one of us, estate planning. You may be thinking, estate planning? Isn't that just for really rich people? Or maybe I'm too young to worry about that. But here's the truth. Estate planning is for everyone, young or old, wealthy or just starting out. In this month's episode, I'm going to walk you through 14 key points from a great conversation between Asset Strategies Managing Director Kent Fitzpatrick and attorney Josh Halpern from Legal Help. They broke down estate planning in a way that's easy to understand, and I'm going to do the same for you. So grab a cup of coffee, take a walk, or settle in, because by the end of this episode, you'll know exactly why estate planning matters and how to get started. Part 1. Why estate planning is a must. Let's start with a number that might surprise you. 55% of Americans don't have any estate documents at all. That means no will, no trust, no plan. And when you don't have a plan, the government steps in when you die. Your assets, your house, your savings, even your car go through probate court. That's where a judge decides who gets what. It's slow, it's expensive, and it's public. Josh Halpern puts it this way. If you don't have an estate plan, the court has one for you, and you probably won't like it. Part 2, let's meet Josh Halpern. Josh isn't your typical lawyer. He started out at a big law firm, but he didn't like how they treated regular people. They charged by the hour, sometimes hundreds of dollars, just to ask a question. And they didn't want to help people who just wanted a simple will or trust. So Josh started his own firm, Legal Help, to make estate planning affordable and easy. There's no hourly billing or confusing legal talk, just real help for real people. Josh has worked with everyone from grandparents to social media influencers, and his mission is simple: make the law approachable. Part 3 is what happens if you don't have a plan. Let's say you pass away without a will or a trust. What happens? Well, your family has to go to probate court. That means your assets become public record. The court decides who gets what. It can take months or even years, and it costs money, sometimes a lot. Even celebrities mess this up. Michael Jackson had a trust, but he never put anything in it, so his entire estate went through probate. That's a mess you don't want your family to deal with. So who needs an estate plan? In short, everyone. Whether you're 25 or 75, whether you have $5,000 or $5 million, you need a plan. Why? Because estate planning isn't just about money. It's about protecting your family, avoiding court delays, keeping your wishes private, and making sure your stuff goes where you want it to go. Think of it like this. You wouldn't drive your car without insurance. Estate planning is like insurance for your legacy. Part 5 is wills versus trusts. What's the difference? Let's break it down. A will is a document that says who gets your stuff when you die, but it still goes through probate court. A trust is a legal tool that holds your assets and avoids probate. It's private, faster, and gives you more control. Josh recommends having both. The will is your backup. The trust is your main plan. And here's a big tip. A trust only works if you put your stuff into it. That means changing the title on your house, your bank accounts, and other assets. If you don't do that, the trust is just a piece of paper. Part 6, what are the other important documents? Estate planning isn't just about wills and trusts. You also need a durable power of attorney that lets someone make financial decisions for you if you can't. A healthcare proxy that lets someone make medical decisions for you. And guardianship documents. If you have kids, this says who will take care of them. These documents are just as important as the will and trust, and they're easy to set up with the right help. Part 7, when should you update your plan? Josh says that you should review your estate plan every 3 to 5 years, or whenever something big happens. For instance, you get married or divorced, you have kids, you buy a house, or you start a business. If your plan is old or out of date, it might not reflect your current wishes, and that can cause big problems later. Part 8, passing on your values, not just your money. Estate planning isn't just about stuff, it's about values. One of Josh's clients was an early investor with Mark Cuban. He wanted to make sure his kids got money, but only if they met certain goals, like staying in school or continuing their passions. With a trust, you can set rules. You can support charities. You can make sure your legacy lives on the way you want it to. You can even set up a trust that gives money in stages, like at age 25, 30, and 35, so your kids don't blow it all at once. Part 9 is revocable versus irrevocable trusts. Here's a quick breakdown. A revocable trust can be changed anytime. It doesn't save on taxes, but it gives you control and privacy. An irrevocable trust can't be changed easily, but it can help reduce estate taxes and protect assets. Most people start with a revocable trust. If your estate is large, you might add an irrevocable trust later. Part 10, the big tax question. Right now, the federal estate tax only applies if your estate is worth more than about $14 million, or $28 million for couples. But in 2026, that number is set to drop, maybe to around $7 million. That means more people could face big estate taxes, up to 40% of their estate. If you're in that category, now is the time to act. You can gift assets, set up trusts, and use other tools to protect your wealth. Part 11. Gifting while you're living. There's an old saying, do your giving while you're living, so you're knowing where it's going. You can give up to $18,000 per person as of 2025 without paying gift tax. That's a great way to reduce your estate and help your loved ones now. You can also give to charities, set up education funds, or help your kids buy a home. Part 12 is a real-life example, college kids and health proxies. Here's a story from Kent Fitzpatrick. When his kids went off to college, he realized something. Once they turned 18, he couldn't access their medical records or make decisions for them. So he had them sign healthcare proxies and powers of attorney. That way, if something happened, he could step in. It's a simple step, but it's one that many parents forget. Part 13, what if you're young and single? You might be thinking, I'm 25, I don't have kids, I don't need this. But here's the thing. If you have a job, a bank account, or even a crypto wallet, you have an estate. And if something happens to you, your family might not know how to access it. A simple will and trust can make sure your wishes are followed. Plus, if you care about privacy, especially with digital assets, a trust can help keep your information out of the public eye. Part 14, the cost of doing nothing. Some people avoid estate planning because they think it's too expensive or too complicated. But doing nothing can cost way more. Probate fees, court costs, legal battles between family members, it all adds up fast. And it creates stress at a time when your loved ones are already grieving. Josh's firm offers flat fees, not hourly billing. That means you know exactly what you're paying, and you get peace of mind. So here's your estate planning action plan. First, number 1, make a list of your assets. Include everything you own: bank accounts, real estate, retirement accounts, life insurance, vehicles, and even digital assets like crypto or online businesses. 2, think about who you trust. Decide who should make decisions for you if you can't. Who should manage your finances? Who should make medical decisions? Who should take care of your kids? And 3, talk to a professional and get your documents in place. Reach out to an estate planning attorney or a trusted advisor. They'll help you create a will, a trust, and other key documents like powers of attorney and healthcare proxies. Don't try to DIY this. Mistakes can be costly. A professional will make sure that everything is legal, clear, and tailored to your needs. Hopefully you found the estate planning presentation helpful. If you need help putting your plan together, give our sister company Asset Strategy a call at 781-235-4426 or visit assetstrategy.com/contact. Once again, that's 781-235-4426 or assetstrategy.com/contact. Finally, April was a crazy month for trade policy, the economy, and the markets. There's a lot of uncertainty now for investors, and we're here to help. If you are not currently a subscriber, or if you know someone who can use some clear-headed guidance, you can start a MoneyLetter subscription by visiting MoneyLetter.com, click subscribe, or by calling toll-free 800-890-9670. Once again, that's MoneyLetter.com, click subscribe, or call 800-890-9670. For first-time subscribers, we have a half-price offer that will allow you to try MoneyLetter for a full year for only $64.50. Call us for more details on that offer. Now that's it for the May edition of MoneyLetter on Markets. Remember, if you have any ideas for this feature, contact us by email at service@moneyletter.com. We appreciate you listening to our podcast and look forward to getting together again with you next month.